Hello and welcome to another update video about COMP. So I think it makes sense to take a look at the bigger time frame again. We have, and that's what I highlighted in previous videos, a bearish wave count here, a bearish scenario, at best an uncertain one. And we still look at this as a three-wave move to the upside here into the May 21 highs. Since then, it dropped in a disastrous way in a five-wave move to new bear market lows. And at the moment, I think we could be in this way retracement of a wave 2. That we had a wave 1 to the downside, that this is now a wave 2 retracement. The challenge here is that it's very difficult to determine where that wave 2 will end. The resistance box is huge, and that is also basically the target range for a wave 2. It can go all the way up to $432. That's up here, the 78.6 retracement level. We've got a few other retracement levels. We've got the $101 level, 155 and 236. These are all levels where I would expect some resistance, but really only if price pushes higher, because it has already fulfilled the minimum requirements for a wave 2, believe it or not. And that's the problem with these charts, which are not reliable or bearish, okay? There's just nothing that would make me confident about further upside. And yeah, it can happen. And as long as we're holding the micro support, it should happen. But is it really a way, is it really a trade I want to be in? Why would I trade low probability wave counts? Okay, because the problem with these charts, which are in a wave 2 to the upside, and that came down in 5 waves, the wave 2 can be very shallow. I've seen very shallow wave 2s in the past in these scenarios, but I've also seen very aggressive wave 2s. There's just no way of knowing where it will end. And that's the challenge. It takes a lot of work to always track the relevant support levels, because you need to track them in order to understand, okay, as long as we're holding this or that level, the price can push higher short term. If it breaks below a certain level, then we have to be ready. We could be in the third wave to the downside, to new lows. And it really takes a sustained break in 5 waves above the $432 level to unlock more bullish potential on this chart and to really make it into a bullish chart potentially. Yeah, but there's a lot of work required, and I try to avoid these charts in my own trading typically. Now, anyway, we have, as I said, we have fulfilled the minimum requirements to the move up already. Why is that? It is because what I have labeled here as an A wave has already, the A wave completed, obviously, so we can take the length of that. We go to the low of the B wave, and you can see that the C wave has already reached the 100% extension. So the minimum requirements are anyway fulfilled. So it doesn't technically need to go any higher, because the 1-to-1 ratio, the 100% extension, is typically a key level that is a key target for a C wave. So an ABC structure might already be complete. It can still go higher, and the fact is that it broke above that level and sustains above that level indicates it wants to go higher. It's just that you need to be ready for potential early breakdowns. Okay, so at the moment, I think there is at least a chance that we could say, okay, this ABC structure is nearly done. A, B, C in a wave A is nearly done. We're now coming down here in a B wave, maybe next. Support is at $30. We're going to zoom in a minute. And we could then get a C wave to the upside in a wave 2. A, B, C. And that C wave could be the wave 2 end. Yeah. So either we have a small ABC and we're breaking down directly, or we make a larger A, B, C in wave 2. There's no way of knowing that. Yeah, I don't have a crystal ball, but what we can do, we can track the relevant support areas. But as you can already see, there isn't really a high, there isn't really any high probability long trade here, because it tells you, yeah, surely it could go higher, but it's not really necessarily high confidence. So I'm going to track these support areas because we have a short-term uptrend. But yeah, I wouldn't be surprised if the support areas break at any point, because what we're doing here, essentially, we are rallying in a correction. So the fact, however, that we're holding quite well up there indicates that we could still push higher. It's, by the way, hovering in structural resistance here at the moment, okay? And the idea is that in this first C wave, which again could form part of a larger A wave, we have completed what you could call 5 waves. So this could still be, let me go to the 4-hour chart actually. So give it a second. The internet is not very good here at the moment. So in this 5-wave move, we fulfilled basically the minimum requirements for that C wave of potentially larger A. As you can see here, we have a 1, we have a 2, we have a 3, we have a 4, and a 5. Now it can still push higher, but I think the risk increases massively that we're now in the B wave. If we get a deep pullback, then this could be a potential to trade the C wave to the upside, which again might reach, for example, $155, 236 or 432. But until then, I think we are just consolidating here at a pretty high level. So if we come back in a B wave, then support will be 30.66. That is the relevant support. Of course, it can find support earlier. For example, here we've got the golden ratio at 38.41 or $45. But if it breaks below 30.66, then I don't think we're going to see a C wave rally. So that's really the level against which I measure now potential bullish upside, which means from here, the risk is very high because it takes a drop of, well, more than 50% to indicate that something more bearish is going on, okay? So at the moment, I find this not a very attractive long trade. Personally, okay, you can always trade breakouts if you like to. Breakout point here is very easily defined, $88, okay? But then you're just below $100 structural resistance anyway, and that's also the next fib level here. So reward to risk ratio to the upside is pretty poor in my opinion at the moment. What I would wait for if I was trading this, and I'm not, is I would wait for a deeper pullback. If it occurs, then I think there is a decent reward to risk ratio long trade here in this region between $45 and 30.66. But at the moment, it can of course go higher short term, but it would need to confirm that by breaking above that breakout point at around about $88. And then the next target would be 100 and 155, which is here. So the $100 level is the next fib level of resistance, and then the 155 level is the one after that. Okay, that's my update about COMP. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.